We're in positive territory. We thought we were going to be seeing a little bit of negativity coming to the fore, given the fact that Asia was under pressure. JSE All-Share up 0.6%, largely driven by those commodity stocks.
Yes, initially we started with a bit of profit taking that came in, the market started down, but we saw buying coming back into the big miners. Bulletin went positive, Anglos went positive. We had some good results like Coronation Fund Managers came out with good numbers, and the Royal Bafokeng listing still looking very good, up another 4.5% again today. So positive on the markets, and the markets turned around, and that quantitative easing that came in from the States, still money flowing into the emerging markets. Our market up again today.
Well, let's touch on the Royal Bafokeng Platinum listing yesterday, gaining all in all yesterday 7%. You're saying that it's up a further 4.5%. Tell us about the demand coming through for the stock prior to its listing, and some of the deals that played out with you, Rob, prior to this stock coming on board.
Well, I think initially on the private listing, a lot of the money that are into that private listing came from long-term pension funds and long-term holders. So I think that the quality of the shareholders are very good in Royal Bafokeng now, and you can see that there's not too much short-term selling, not too many people coming in just for the quick buck. So I think that people carry on buying the stock, and it's got a really good potential going forward. I think with the assets that they hold as well, they're a potential buyout target in the next year or two if they keep their management and what they've said in the prospectus going forward. I think that they will be somebody will come to buy those assets.
And the timing pretty good as well when you look at what's happening on the platinum front. I mean, we're very close to hitting $1,800 an ounce. We're about $20 away, in fact, on that platinum price. Of course, all investments scenarios playing out at this point in time, pointing to heading into some of these inflation hedges, platinum being one of them. Are investors looking for the growth scenario? Do you think that it's also being buoyed by the fact that platinum is looking pretty good? I mean, we've also got to consider that the dollar-rand price, of course, the rand gaining extensive ground over the last few sessions, so that could be a dampener for all miners in South Africa.
The rand obviously is a problem, but I think that where the platinum price is going, it's looking very positive for Royal Bafokeng. They're also funding their growth just by sales from their one mine, and so a very good, strong price on platinum will help Royal Bafokeng. And I think going forward they look very solid. The strong rand is going to be here for a while. I think that miners have to get used to dealing with that strong rand. They have to keep their cost base low, and they need to get their production and the amount that they're producing up. So I think that miners mustn't expect 8 rand to the dollar. I think that with quantitative easing in the Western world, emerging market currencies are going to be strong for the next 6 months to a year. And until the interest rates start to move to the upside in America, the currencies, emerging market currencies, are going to be strong. So I think they have to take a strong rand going forward, cost reduction and increase in production, or what they'll be looking for.
A short while ago, the gold mining index was rallying just over 3%. That's quite surprising given the fact that we're sitting 680 around there to the US dollar. Rob, why are we seeing so much strong buying coming through for these gold shares, given the fact that perhaps profits are going to be dampened by the local currency?
I think the strong rand's been there for quite a while now, and that the gold price has moved from about 1,300 now, 1,400, extra $100. So even that gold price, I mean, the rand is very strong at 680. We've seen that there for the last few weeks. And as you say, Goldfields figures came out a while ago, and they've started to get costs under control. So as long as they can keep those costs under control and increase productivity and the amount that they're producing, which Goldfields numbers showed a week ago, people will come into and carry on buying those gold stocks even with that strong rand. So I think it's just keeping costs down. Yeah,
well, Rob, I mean, the gold price hitting a new all-time high of $1,414.60 a fine ounce. Some are calling around $1,430 when it comes to the gold price. What is really underpinning the gold price right now? We've seen some debt worries coming through from Ireland and the Eurozone. We've got quantitative easing coming to the fore. No one's really concerned about inflation, but we of course are going to be focusing on China's inflation number that will be released later on this week. And then we've also got the G20, which could also be underpinning some of the buying into the yellow metal.
Yes, well, the G20 starts with their discussions Thursday and Friday, so the market is waiting to see what quantitative easing measures they're going to institute with the sovereign debt problems in Europe. Ireland and Portugal are really under pressure at the moment, and people may be expecting that one of them could default. I don't think it will get to that point, but people are going back into gold as a hedge against that. And then secondly, the job data in the States has been positive the last week. If it continues, we've got non-farm payrolls out again on Friday. If those improve again, and the economy starts to improve in the States, there could be a chance of inflation coming through there with this second bout of quantitative easing. So I think there is inflationary pressure as well as sovereign debt in Europe, and people staying away from both political issues and going just straight into gold, where no one really owns it. There's no sovereign owner of gold, so people are going in there as a hedge on both.
We could just get that gold graph back up at $1,414.75 an ounce is what I saw a little while ago, so that officially being a new all-time high. Rob, let's quickly take a look at Coronation Fund Managers. More than doubled its full-year diluted headline earnings per share to 128 cents. The CEO, Hugo Nelson, saying that the past year was exceptional and basically cautioned against such strong growth going into the future.
I think he had to caution against that. They had a really stellar year. They got a 28% extra funds under management. They're now sitting nearly at 200 billion, and now the third biggest manager on long-term funds. So a really exceptional year. I think a lot of pension money and institutional money that was sitting in hedge funds, with the volatility over the last year and a bit, has come out and moved into managers like Coronation. So they've really benefited from that. And whether that flow will continue might be a bit difficult going forward. But I think the share's done very well. They're managing well. They've got 4 or 5 funds that are rated #1, and even though they're looking, the share price has run really aggressively. Profit taking should come in, but if that share price moves down a bit with profit taking, I'd look to be a buyer still.
Absa third quarter profit before tax increased by 20% in pounds sterling, that is. Looking at the rand price, broadly flat. We did see an improvement coming through on impairment charges. Operating expenses increased as well. What do you make of these results?
They're not fantastic. I think in rand terms they didn't make any money. And secondly, their costs are increasing. I think that they also released quite a few staff, and even with that, their costs have started to increase. So that's a little bit problematic for Absa. The market has seen it not too negatively. I think they're up about 0.2%. But all the banks are battling for revenue and for growth. We see FirstRand moving into Africa now as well, and the banks are all looking for growth, moving out of just South Africa and moving into Africa. And I think that Absa will have to do that as well to get extra growth and more money coming in.
Rob, quickly taking a look at the JSE All Share, we're sitting at around 31,500 points. We're seeing a bit of money being taken off the table. Sometimes markets stall, so we don't really know where we're going from here. But the truth is we're not very far away from that 33,000 level that was hit in 2008. What are you advising investors right now? If you haven't got into the markets, would you be buying at these levels, or are you taking money off the table?
I think investors that are absolutely not in the market now must still go into the market. 20% you can go into the market at these levels. I think that the market can stay extended for far longer than people expect, and to wait for it to turn around to come back to buy, you're probably going to miss the boat. So I think that if you are totally uninvested, you should still start to look at buying some of the quality stocks, some of the stocks that still giving you good dividend yield. People that are fully invested will definitely be taking some off the table, but definitely would not be going back into cash where returns are very thin.